my next guest says the specter of a steeper decline may be overdone, and the bubble talk itself may be facing a bubble. Joining us now, Nancy Tengler, Laffer Tengler Investments CIO and CEO. Nancy, it's great to see you. You know, it's really funny, all of this bubble talk, because as I was saying earlier in the show, the vast majority of folks we are talking to are saying it's not a bubble. They say things are, some things may be richly valued, but they don't consider it to be a bubble. Nonetheless, something was causing the sell-off last week. So what do you think is going on here sentiment-wise?
Well, it's great to be with you, Julie. I think a couple of things. I mean, I may be a little bit cynical, but I think a lot of the narrative has been driven by people who got out during the tariff tantrum and forgot to get back in. And then, of course, valuations have run dramatically since then. But I was managing money in the 1990s, and it didn't look at all like this. You've got CapEx spending that's just getting started. It was escalating or skyrocketing during the entire decade of the 1990s. You got earnings growth, and the growth stocks are expanding at 20% in the 90s, and from 96 to 2000, it was contracting. The best performing stocks in that decade were companies with no earnings. And that is just not the case now. And so will there be an overbuild? Maybe, but it doesn't look like it yet. And it doesn't look like it for the foreseeable future.
Nancy, something that has really struck me about this innovation wave, this huge rally that we've seen in the markets, is how ambivalent normal people seem to feel about it. And when I say that, what I mean is, if you look at survey data about AI, people are not super excited about what they think is a potential for them to lose their jobs. And that has happened to some extent in past innovation waves. But this one feels, the sort of disconnect feels a little more dramatic. I don't know. How do you think about that?
Well, you could be right, Julie. And I think it's been exacerbated by the fact that we don't have any data. So consumer sentiment numbers are pretty moribund, but I will say that we think the One Big Beautiful Bill Act is going to contribute to consumer spending due to, the bill was retroactive, as you know, and the payroll taxes were not adjusted. So there will be big refunds. Some are arguing 150 to 200 billion, and that money will get spent because it's going to the lower income cohort who usually does spend. So we've actually been adding to consumer discretionary in here, and we expect that the sentiment will shift upward, and that may bridge the gap to the disconnect you're talking about, because unemployment is still at super low levels. We are seeing layoffs, but we're not seeing the kind of layoffs we've seen in periods of recession, pre-recession, or a really weak jobs environment. So I think stay tuned. I think a lot of this has been exacerbated by the vacuum of information.
Well, and to that point, of course, we're going to get a jobs report, but it's going to be for September later this week. So once we start to get more of the more current numbers, do you think things are just not going to look as bad as perhaps the sentiment would indicate?
I think so. I think they're going to look not great, but they're not going to look horrible. We have some clues from the ADP weekly numbers now, the Revelio numbers, the ISM, which is privately, constructed data, gives us some insight into manufacturing and services employment. And we're also seeing that, generally speaking, consumers are still spending. It's mostly the upper income cohort, but people are working. And so once we settle in, we expect to see some wage growth next year. That will help. The tax refunds will help the consumer pretty significantly. So I think, and the jobs numbers have been so dramatically revised, Julie, to the tune of 1.7 million over the last 2 years. That means productivity is actually better than has been reported. So we're pretty optimistic. I think that will turn. And once everyone gets an optimist in every home, I think you'll see a lot of enthusiasm around AI.
Well, that's still feels like we're a little bit far away from getting an optimist in every home. But, be that as it may, you are still definitely buying and holding at least the AI trade here. And I think it's notable that I know you still have Nvidia. We've talked a lot about that. I know you still have Broadcom. And I find it notable that it is the big established names. It doesn't seem like you're going that far out the sort of speculative spectrum when it comes to AI.
Well, we're not in our major large cap strategies. We did launch a strategy that is a thematic strategy at the end of the last quarter, and it focuses on quantum space, robotics, and nuclear. So we do have some of the speculative names in there, but effectively, we think that you want to own the leaders in this environment, the fortress balance sheets, the companies that can issue debt attractively. You saw the Amazon news today. That's in our 12 best ideas portfolio, 5 for 25. But we also have broadened out, and that has been our theme for the last 3 years. Old economy companies that are embracing the new technologies. Think Walmart, think Raytheon, for example, as poster children for that side of the theme, and then the suppliers of the picks and shovels.
And you mentioned the Amazon debt sale, which Bloomberg is reporting this morning. When it comes to not necessarily the Amazons and Nvidias of the world, if they're taking on debt, but do you have any concerns about companies that have more debt on their balance sheet that are more speculative? Oracle, for example, which is now junk status according to the ratings agencies. Do you have any concerns on those fronts?
We do. I mean, I think at the center of our concerns are the commitments for CapEx that OpenAI has made. And the worry is that they won't be able to supply the revenues or raise enough capital to cover it. We had a call with Oracle last week. They are committed to keeping their investment grade rating. And so I think you will start to hear more from the company. I'm not convinced that sell-off was justified. The stock had certainly got ahead of itself. It's a member of our TGLR portfolio, which is our ETF, and it was the largest holding. We trimmed it back in the low 300s, but we still own a good chunk of it. And I think they became the dumping ground for the concerns post-Meta earnings and then this overcommitment, in my view, by OpenAI. So we will see. We may be adding to that name here in a little bit because it has been. It's just become a narrative stock, and the fundamentals are still pretty darn good.